We've got Toshiya Hari. He is Goldman Sachs head of U.S. Semiconductor Research, and he holds a buy rating on NVIDIA. Toshiya, it's always great to speak with you because you have such great insights into NVIDIA. I know that you recently met with Jensen Huang. You also had him speaking at the Goldman Tech Conference earlier this year. What is the biggest thing that you learned from those conversations that is going to impact your thinking heading into NVIDIA's print?
Of course. Thank you so much for having me, Madison. You're right. We did have Jensen attend our conference in early September. We were also on the road with him and the rest of the team very recently. Look, there are a couple of things. First, in terms of the demand profile out there, the environment continues to be very robust. If there's a problem, it's a supply problem, not a demand problem. You've got the large hyperscalers, which we will hear from next week from a couple of them. They're still in the early stages of the build out from an AI infrastructure perspective. The customer profile is broadening beyond the hyperscalers into enterprises and also sovereign states. So there is demand across the board there. Secondly, I think there's been this perception historically that NVIDIA is very strong in training, yet their competitive position could potentially dilute as we transition to inference. As you look at the most recent models that have come out from OpenAI, the complexity from an inference workload perspective is going up, has gone up. And as that proliferates to other models, we think that will only grow NVIDIA's growth opportunity set and potentially expand the competitive moat that they have. So again, demand very strong, competitive moat very sustainable.
NVIDIA might be on the verge of its most significant moment. The massive artificial intelligence, AI, chip company is preparing to introduce a new architecture that, given the array of cutting-edge features it offers, has the potential to revolutionize the market. In the fourth quarter, NVIDIA plans to increase manufacturing of the Blackwell chip and architecture. This occurs at a critical juncture for the tech firm. Over the past 5 years, NVIDIA has established an AI empire and consistently increased its income in the triple digits. Now, however, triple-digit gains might not be sustainable if the company's revenue levels hit extraordinarily high levels. Additionally, competitors have created chips in an attempt to gain market share. Therefore, it makes sense to wonder, where will NVIDIA be 6 months following the release of Blackwell? Let's investigate and see what history has to say, along with some other hints. First, a brief overview of NVIDIA's current trajectory and the Blackwell launch's anticipated outcomes. By creating the most potent CPUs and a whole suite of related goods and services, NVIDIA has established a dominant position in the AI sector. Customers can therefore choose to use NVIDIA just for the graphics processing units, GPUs, chips, or they can use the full NVIDIA stack to power their data centers. As a result, the company's quarterly revenue reached a record $30 billion, and its gross margin increased to almost 70%. With a recent quarter profit of over $16 billion, NVIDIA has also seen a triple-digit increase in net income. Thanks to the architecture's 6 revolutionary innovations, investors are now looking forward to the Blackwell launch with great anticipation. These innovations include NVIDIA's best chip to date, a 5th-generation NVLink that will enable high-speed communication between up to 576 GPUs, and a high-performance preventative maintenance system that will guarantee system uptime. NVIDIA intends to increase production of Blackwell in the upcoming weeks, as previously said, and CEO Jensen Huang gave us hints on consumer demand in this new product in the company's most recent earnings report. Demand has outpaced supply, according to Huang, and he anticipates that this trend will continue throughout the upcoming year. Huang reaffirmed this in a more recent interview with CNBC, describing the demand for Blackwell as insane. NVIDIA predicted billions of dollars in Blackwell revenue in the fourth quarter as a result of all of this. Thus, it won't take long for Blackwell to begin making a substantial contribution to NVIDIA's top line. Furthermore, NVIDIA projects a gross margin for the entire year in the mid to 70% range, demonstrating to us that the business can introduce this significant product and yet turn a profit. Let's now discuss NVIDIA's potential position 6 months following launch. The first hint comes from history, which demonstrates that the stock of NVIDIA increased by almost 100% in the 6 months after the company's most recent release of a new architecture, Hopper, in 2022. About 6 months after the Hopper debut, NVIDIA's earnings report for the period ending April 30, 2023, reveals that demand for the platform and related goods was soaring. Additionally, NVIDIA announced record-breaking data center earnings for the quarter, 6 months after the impending Blackwell launch. We can therefore draw confidence from history regarding NVIDIA's posture. I'm also hopeful about the future because of a few additional factors. NVIDIA may be able to boost margins as it overcomes the early launch costs and optimizes the Blackwell production process. It's okay if this isn't as soon as 6 months after launch. Any improvement over the current gross margin, which is already exceeding 70%, would be like frosting on the cake. Although NVIDIA does not disclose the percentage of revenue it receives from any one client, news and analyst sources indicate that Microsoft, Amazon, Alphabet, and Meta platforms are the company's top clients. This is advantageous as each of these participants has the means to keep increasing their investments as the AI boom develops. Furthermore, recent tales demonstrate how keen market titans are to acquire NVIDIA products. Larry Ellison, a co-founder of Oracle, reportedly said that he and Elon Musk, the CEO of Tesla, begged NVIDIA for additional chips. This implies that industry titans continue to gravitate toward NVIDIA before rivals introduce new CPUs. Naturally, NVIDIA might not report triple-digit growth every quarter as it has in prior years, as was previously noted. We may therefore be in for a slower growth rate than NVIDIA had previously indicated 6 months after the Blackwell launch. However, this is because NVIDIA's income has already skyrocketed, making it challenging to maintain such a rapid rate of growth. Therefore, a slowness is not necessarily a bad thing. As a result, NVIDIA may still be battling to meet the massive demand 6 months after the Blackwell launch, but it may also announce billion-dollar platform revenue and strong profitability growth. This can potentially result in outstanding stock performance. However, NVIDIA is in a strong position to benefit investors in the long run, even if the shares don't increase as much as they did after the Hopper launch. If you want to keep up with NVIDIA's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalysts in the market. So click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
What you've heard from those hyperscalers about their CapEx when it comes to NVIDIA, there's been this big question about whether or not we're going to see a return on that investment from hyperscalers. What are you hearing about that?
As of now, Madison, I think, again, as a group, as a cohort, the hyperscalers are very much in build mode. Our colleagues' capital spending estimates for calendar 25, the bottoms-up number is suggesting sort of mid-teens to high-teens growth. We do think, based on what we're hearing from customers and partners and the supply chain in Asia, there's probably more upside risk to those numbers. So again, we'll find out as we progress through next week and a couple of the big customers report. We do think there's potential upside there. Again, the big debate is not so much calendar 25, it's really calendar 26. At this point, it's very difficult to prove or disprove where things are headed beyond 25. To the extent we're sitting here in 6-12 months and the monetization is not there, the ROI is underwhelming, increasingly we would potentially become a little bit more worried about not just NVIDIA, but the companies that really make up the ecosystem from an AI infrastructure perspective. But at this point, again, we remain very constructive.
So Toshiya, what does that tell us about where the stock's headed? I'm guessing it's headed higher in your view, and you see new all-time highs on the horizon.
That's right. We do expect upside from here. When we compare and contrast how we're thinking about the 25 earnings profile, the margin profile for the company relative to street consensus, we're modeling about $4.65, give or take, in EPS for calendar 25. As of this morning, I believe we're about 15% above street consensus. So, again, we have about a month left until the company reports. But as we progress through earnings season, we hear from the hyperscalers, we hear from NVIDIA in a month's time. We would expect street numbers to move up and for that to drive the stock higher as well.
All right, Toshio Hara.
One of the simplest methods to begin earning passive income is to invest in equities that generate dividends. The difficult part? Determining which stocks to buy and how long it will take for you to start receiving a steady stream of income. Researching businesses you are already familiar with, such as NVIDIA, is one tactic. The renowned chipmaker is one of the Magnificent Seven stocks and has a market value of over $3 trillion. Additionally, NVIDIA pays dividends to its devoted investors. Overall, the dividend yield is a pitiful 0.02%, so income investors generally won't be overjoyed. Dividends, however, reveal something about the company's confidence. It's a tiny indication that they have faith in their capacity to maintain their financial stability, which suggests that those cash flows may continue to flood in. Get ready. NVIDIA only pays out $0.01 in dividends every quarter, which comes to a total of $0.04 each year. Additionally, we might be looking at the same amount in 2025 unless the corporation increases the dividend. Although it's not quite a lottery for income investors, consider this: splitting stocks. In June, NVIDIA executed a 10-for-1 stock split, dividing each share into 10. After accounting for this, $0.01 per share is equivalent to $0.10 per share prior to the split. As a result, although the distribution per share seems smaller, it is proportionate to the total value owned. Increases in dividends. Businesses have the right to raise their payouts at any moment. For instance, NVIDIA increased its quarterly cash dividend from $0.04 to $0.10 per share, a 150% increase, back in May. Growth potential. NVIDIA invests money in research, development, and expansion in computing and artificial intelligence rather than increasing dividend payments. You could ride the stock's long-term growth if you can withstand its ups and downs. NVIDIA's growth story has investors salivating despite its lackluster dividend. NVIDIA ought to be on your watch list if you're looking for a business that prioritizes future profits over huge dividends now. The fundamental reality of investing in semiconductor stocks, such as NVIDIA, is as follows. This is a highly cyclical industry. Despite long-term volume growth, the valuations of almost all chip makers, including NVIDIA, dropped by double digits in 2022. The industry's overall valuation then skyrocketed in 2023, but in 2024, an intriguing event occurred. While AMD's valuation stayed same and Intel actually saw a 1/3 decline in value, NVIDIA's share price continued to soar. The previous few years are not unusual, with new inventions and growth categories causing values and market shares to drastically move. The semiconductor industry presents both fresh difficulties and possibilities every year. AI, however, is without a doubt going to be the largest growth engine over the next 10 or more years. NVIDIA's GPUs are currently the preferred choice for almost all AI developers. In fact, companies are ready to pay a lot more for NVIDIA chips than for other brands. Given that NVIDIA is seeing growing volumes and pricing power at the same time as spending on AI infrastructure is taking off, this is fantastic news for the company. However, competition is getting stronger, much like in past chip wars. The Gaudi 3 and Falcon Shores CPUs, which Intel is spending billions on, recently demonstrated performance equivalent to that of NVIDIA's H100 models. Additionally, the majority of AI applications currently under development can be handled by AMD's MI325X CPU, which will ship later this year. So what does this really mean for NVIDIA's stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Toshio, it sounds like you're saying that any concern almost of the fact that NVIDIA could be slightly losing their dominance, or the fact that some of these smaller players are gaining maybe more of a competitive edge, or better able to compete with NVIDIA. It doesn't sound like that's worrying you at all.
It's something to definitely keep in mind and to be cognizant of. And there are a handful of startups that are making really good progress. There are other merchant companies as well that compete effectively with NVIDIA. But when you think about NVIDIA's ability to really innovate across multiple components, if you will, it's not just the GPU. They've got their internally designed CPU, the Grace CPU. They've got NVLink, which is a switch that essentially connects multiple GPUs. They've got Ethernet connectivity, they have InfiniBand connectivity, and obviously they have a very broad suite of software that augments their hardware capability. So when you think about their breadth and their ability to innovate at a 12, 18-month cadence, I think it's going to be very difficult, very challenging, and expensive for others to compete head-to-head with NVIDIA.
I want to get your response, Toshiya, from two things that analysts we've spoken with have called out in a somewhat bearish case on NVIDIA, though you can't really be bearish on NVIDIA right now. But they've talked about the potential competitors, something like a Cerebras, for example. They've also talked about the potential slowdown in demand if we do have a macro challenge moving forward. Which of those two do you think is more likely, or do you think that neither one is actually going to be that big of a headwind for NVIDIA?
Yeah, it's a great question. Between those two, Madison, I would say the latter probably comes up more and more in our conversations with investors. Again, I don't think the company is complacent in any way. They are very paranoid when it comes to competition. But again, the bigger debate is really how to think about sustainability of demand going forward. The majority of investors, we believe, are fairly comfortable with the outlook going into calendar 25. The big question mark is calendar 26. To the extent CapEx continues to go up at the hyperscalers, potentially negatively impacting their gross margins, their free cash flow, what does that mean for 26 and beyond? So between those two, Madison, I would be a little bit more concerned about the latter. But again, at this point, we remain pretty positive on the stock and on the trajectory going forward.
Talk to me.
With a record-breaking stock gain driven by the unquenchable demand for its specialist artificial intelligence chips, NVIDIA overtook Apple as the most valuable business in the world on Friday. NVIDIA's stock market value briefly overtook Apple's $3.52 trillion, hitting $3.53 trillion, according to LSEG statistics. Apple's shares increased 0.4%, valuing the iPhone manufacturer at $3.52 trillion, while NVIDIA's shares ended the day up 0.8%, with a market value of $3.47 trillion. In June, NVIDIA briefly topped the global valuation rankings until being overtaken by Apple and Microsoft. For several months, the three giants' market capitalizations have remained in close proximity to one another. With its stock up 0.8%, Microsoft's market worth was $3.18 trillion. The Silicon Valley chipmaker is the leading provider of processors for AI computing and has emerged victorious in a competition to control the new technology between Microsoft, Alphabet, Meta Platforms, and other industry titans. Known for designing video game processors since the 1990s, NVIDIA's stock has increased by roughly 18% so far in October. These gains have come after ChatGPT's creator, OpenAI, announced a $6.6 billion fundraising round. Western Digital, a manufacturer of data storage, posted quarterly profits that exceeded analysts' projections on Friday, boosting confidence on data center demand and boosting NVIDIA and other semiconductor companies. The demand for NVIDIA chips is still high as more businesses integrate AI into their daily operations, according to Russ Mould, investment director at AG Bell. It is undoubtedly in a sweet place, and as long as the U.S. economy doesn't experience a significant downturn, businesses are likely to keep making significant investments in AI capabilities, which will give NVIDIA a good tailwind. Following a surge last week when TSMC, the largest contract chipmaker in the world, reported a forecast-beating 54% increase in quarterly earnings due to the surge in demand regarding artificial intelligence processors, NVIDIA's stock hit a new high on Tuesday. Apple, meantime, is having trouble with the lackluster demand for its iPhones. China had a 0.3% decline in iPhone sales during the third quarter, but a 42% increase in sales of rival Huawei phones. According to LSEG statistics, analysts predict that Apple's revenue would increase by 5.55% year-over-year to $94.5 billion when it releases its quarterly results on Thursday. Analysts had predicted that NVIDIA's revenue would climb by almost 82% to $32.9 billion. With around a fifth of the weight of the S&P 500 index, shares of NVIDIA, Apple, and Microsoft have a significant impact on both the larger U.S. stock market and the highly valued technology sector. The benchmark S&P 500 reached an all-time high last week, thanks to optimism about the future of artificial intelligence, hopes that the Federal Reserve will significantly lower U.S. interest rates, and most recently, a positive start to the earnings season. The company's options are among the most traded on any given day in recent months, according to data from options analytics service Trade Alert. NVIDIA's enormous gains have contributed to the stock's increased attraction to option traders. In conclusion, while NVIDIA stock presents a compelling case for growth given its leadership in AI and graphics technology, potential investors should carefully weigh the current market conditions, valuation metrics, and broader economic factors before making any decisions. Engaging in thorough research and considering both the risks and rewards is crucial. As always, sharing your thoughts and insights in the comments section can foster a more informed community discussion, helping everyone navigate the complexities of investing in this dynamic sector.